This is Larry Edelson with my Uncommon Wisdom video market update for Monday, December 12th. Just a quick note, I'm recording this video on Friday morning, December 9th. And this weekend, Europe's leaders are meeting to try and resolve Europe's ongoing crisis. So the price action I discussed today may turn violent before the markets open on Monday morning. That being said, if there are any trend changes, any important trend changes at all, I will alert you via another special update this week. However, I do not expect that to be the case. First off, the markets themselves are telling me what the outcome in Europe will be. The markets are all starting to break down, which indicates to me that Europe will not solve its problems. I'll get to the charts in a minute. First, let me tell you why I personally believe Europe's leaders are going to fail once again. For one thing, Europe continues to refuse to deal with the real problem. That problem is that Europe never created a fiscal union to begin with. In short, at the beginning of the euro, they left all the member states' debts out there on the table and did not create a unified debt structure in the way of a euro bond market like our U.S. Treasury bond market. That was a fatal mistake, one of many that Europe's leaders made. In addition, they continue to neglect the one mistake and even now refuse to create Eurobonds. So that ill-conceived foundation for the euro persists. Moreover, the agreement they are supposedly hammering out this weekend is merely going to make matters worse. Unbelievably, France and Germany are moving to exercise direct control over the national budgets of other European Union member states. That's effectively asking countries like Spain, Italy, Portugal, Greece, and all others to give up their sovereignty to France and to Germany. Even if those countries agree now, down the road, it's just going to seal the fate of the European Union. There is no way those countries will kowtow for long to Germany and France. And to top it all off, the European Central Bank continues to refuse to print money, which, although it would be inflationary, is the one thing that could really help. It would allow the ECB to create a Eurobond market, which will relieve pressure on the bankrupt European countries. In short, I see no end to Europe's problems. Perhaps a glimmer of hope here and there, but no resolution, which is precisely what the markets are telling you. Let's go right to the gold chart. In this chart of gold, you can clearly see from the price action that gold is rolling over. It has failed to get back above even the minor uptrend line you see on that chart. On the downside, there is not much in the way of support for gold until the $1,500 level. I do have system sell signals sitting at the $1,700 level now, followed by 1,696. When gold closes below those two levels, I expect gold to make a sharp move lower down to the $1,500 area. In short, I recommend keeping all hedges in place. Now, let's take a look at silver. As you can see from this chart of silver, silver's recent performance is pretty weak. It's inching lower along that mid-channel support line you see there on the chart. When a market creeps lower along a technical support line, it's a sign of weakness. I expect silver to soon break hard that support level, and when it does, watch out below. You could easily see silver quickly drop to the $25 level where there's system support and then fall even lower. Now to the US dollar. Naturally, the dollar is benefiting from all the uncertainty surrounding Europe. It's catching a bid as capital leaves the euro in search of safety and liquidity. I do expect further rallies in the dollar, probably up to about the 82 level in the dollar index. But please, do keep in mind that the dollar does not have a lot of upside to it. Down the road, when the euro crisis morphs to a dollar crisis, the US dollar will go back into bear market mode. Lastly, let's look at the Dow Industrials. In this chart here, you can see that the index is certainly kind of holding up better than I expected. But just this week, the Dow was repelled by the resistance offered by that uptrend line you see. In addition, we have what I call an unresolved low down at the 11,200 level from November 25th. And I fully expect that to give way on the next selling wave. I remain bearish the broad stock markets. One last thing. A lot of readers have asked how I could be bearish commodities when Europe is literally falling apart. The simple answer is that the euro crisis is driving money mainly into cash, into the dollar, and into liquidity, more so than commodities. So that's bearish for commodities. Later, when the sovereign debt crisis hits the United States and the world's reserve currency, the US dollar, that's when you will see the true next leg up in commodities. Keep that in mind. This is Larry Edelson.